Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, August the 29th, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place, as we do not know what the market's going to do. We simply have to wait to see which hand is showing itself and then execute the plan that best suits what the market is doing. This is a subscription room. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here on the go-to. Then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so taking a look at yesterday. Our main hypothesis was a rotation down and then finding buyers in around the 40 area and rotating us back up and through towards that 51 area. Hypo 2 was an open auction in range, a failure to take out the high of the prior day at 53, I believe it was. It was 53.50, and then a rotation down towards that 40 area, fight the 40, and then push down into the 35 area. And then Hypo 3 was a open auction and basically a rotation down near the low of the prior day, and basically sideways situation. What we got was a little bit of Hypo 1 and a little bit of Hypo 3. We came down, they did find some buyers, they gave us a nice counter rotation, but they failed to get back above the IB low from the prior day, and then this just sort of came down, and then they just went sideways, creating this distribution zone, and we closed with a shift of the VPOC back up into the 43 and a quarter. We closed at 43.75, but we had some news come out. So let's talk about the elephant in the room. Overnight, during the time that the market was closed, the North Koreans fired a missile that actually flew over Japan. And that's why I put in the room prior to the Globex open, is that we were going to gap down, and it was unlikely that this gap was going to get filled due to revaluation of the market on the North Korean missile news. Wonderful opportunity on the open to get short. I did get short. And then we had a Mr. Sneaky, FUBAR Mr. Sneaky show up. There was one showed up on the ES 5-minute, and then there was one that showed up on gold, which I also took both of those. And they offered a nice counter rotation. But mainly, we've basically opened, and we are 100% basically net short. And we've got this broken profile. We are going to gap down. If we open where we are opening right now, or where we're trading right now in the, let's call it the 29.50 area, that's going to bring us down about 14.5 points. Taking a look at my gap study, a gap down of 14 points or more, actually call it 13 points, just to give it a little bit of wiggle room, because it's the same statistic, has a 90% probability of not getting filled. Okay, so we have a 90% probability today that we're not going to go and take out that close up here at the 43.75. So we have to be very aware of that. It's unlikely that that's going to happen. We had two key distribution points last night here at 27.50 and here at 31. We're right inside of the thick of that area on the composite, which is undetermined fair value, and we're likely to chop around in this area today and as things settle out. But we'll get into that a little bit more in just a bit. Let's take a look at the news. In 4 minutes, we've got Redbook coming out, not real big important. In 9 minutes, we've got S&P CS HPI composite, expected 5.7. And then at 10 o'clock, the big news today will be the CV consumer confidence for August. And that's expected to come out at 120.3. Dallas Fed Services revenues comes out at 10:30. Texas Services Sector Outlook comes in at 10:30. And then we've got Evans from the FOMC speaking at 11. And then 11:30, we've got the 4-week bill auction. And then at 1 o'clock, we've got the 7-year note. So there is some news, the big one being, of course, the one at 10 o'clock, the CV consumer confidence. So each morning, I like to start my day with a simple candlestick chart. I use my paper money because it's got great drawing tools and gives me live data because I've got my other version on my other computer. But I start with the monthly and I start working my way down. You can see that the 9 EMA and the 20 SMA, which are the two moving averages that I use on my charts, I'm looking for where we are in the trend on each time frame. Do we have good slope, good separation, strength of trend, or is the trend being challenged or violated? Challenge is a break of the 9. Violation is a break of the 20. You can see that we're nowhere near challenging the monthly trend. Going to the week, well, I keep pointing back to this Mr. Sneaky on the weekly, and as I talk about all the time, that Mr. Sneaky's work not just in the smaller time frames, they also work in the larger time frames. And we, on the beginning of this week right here, we were talking about the fact that we're likely to come down and test this 9 EMA. We broke it, and we are coming down, and we're challenging the trend on the weekly. We do have a trend line on the weekly above us, so we've got to watch where that is. But if you look at the daily, you can see that the daily, let me get rid of this here. The daily is starting to look pretty weak. We've got good slope and separation, to the downside. We've broken a long time frame trend line. This trend line started on the gap up of the election, and we've tested it a couple times. This is the first time we broke it here. We tried to get back above it, failed to hold, came back down, and then of course we get the gap down now today, and this is looking pretty weak right now, with a major break of a longer time frame trend. Going to the intraday, you can see that we gapped down on the news. We failed to get back above the open. We're holding below the 9 and the 20. We're getting slope and separation, start of slope and separation to the upside. Going to the 1 hour, we have tried to get back above the 20, failed at the 20, and we're getting back below the 9. So again, some weakness. There is a naked cross up here at 24.41 on the 1 hour. On the 30-minute, we've got one that we just took out. We had this one right here, but it just got taken out. So we're trying to break below the 9 and the 20. There's a bit of a cup and handle setting up here on the 30-minute. So just quickly draw it out. There's your rim. Whoops. There's your rim. I don't know if it's validated yet, so let's just, it hadn't validated when I looked at it a few minutes ago. It has come down, the market's come down a little bit further. So it is validated. Now, caution, okay, I would not try to take this until you break above the rim line and hold. But if we do, let's measure the projection of the measured move. So that takes us to 39.45. So 39, call it 39.50. Just writing that in my journal here. All right, so getting rid of the, don't need these right now. So keep an eye on that. It could violate. I should have checked to see where it violates. Let me just do that, just so that we have that number in our head. So if it does violate, I would say safe if we get below the 25 area that this cup and handle has been violated. Going to the 15-minute, you can see that we're above the 9 and the 20. There is this naked cross right here at 26.75, and then there's one up here at the 41 as well. We just took this one out on the way back up at the 30.50, and then on the 5-minute, you can see that we're getting this start of this trend down again. So watch this this 29.75 area to watch. So what does this look like on the bigger picture? Well, pretty simple. We're right smack dab back in the thick of this right here. And we've got undetermined fair value at 35.50, 29.75, 27, and 24.75 and 22.75. So likely to see some chop. Now we have a naked close and a naked VPOC just below us, and I'm anticipating that these are going to get taken out today. Key areas to watch. Anything above the 31.50, I'd be shooting for that 35.50. 40 is going to be our key line in the sand above, and then our key line in the sand below still remains the same at the 14.75. Our 20-period daily ATR is running right now at 18.01. We have 3 days left. Our month open is 24.70.50. So our monthly critical mass today, okay, and this will change as we move forward through the next 3 days. But our monthly critical mass is actually at 16.50 with our month low at 15.75. So if we do see a sell-off, coming in, when the RTH session opens up, watch that 16.50, because if we get below it, they're likely to put in a new month low and come and test that key line in the sand, and then we've got our targets below. So those are the major key levels. Let's just start putting our numbers on our trade chart. Of course, we've got this gap up. So I'm not going to use the extent. Usually I would use the 44.75 as my high for the night. Because of the break in the profile, I'm going to use the actual Globex high, and that is at the open, which was what? 34. So overnight high, 34. Overnight low, 21. Overnight VPOC could shift again. If we come down and trade some more down here at 27.50, likely to hold at the 31. Right back in this gap zone too, the half gap. Okay, so this gap is going to be probably closed out sometime today or tomorrow. We're going to be testing it actually from probably both sides today. Pretty toothy profile, pretty boxy. No real LVNs to lean against. So we really have to use our longer time frame levels. So I'm going to be using the 31.75 as a trade area. Above that, targeting the overnight high and a move to the half gap. So if we opened up right now at the 30 area, and again, I don't know where we're going to open, so this is just approximate. Our half gap is going to be around 36.75. I'm going to put it approximate. And again, we can adjust this on our open. And then, of course, I'm going to be watching the 38s. 40, I'm going to move it up to the 40.50. That's the value area low, and it is our key line in the sand above now. The microcomposite VPOC, an overnight high, is our target above the 31.75. And there's not a heck of a lot to lean on, down here. So until we get all the way down to that 17. So this is where it's going to get really tough to trade off of. There's a little bit of a LVN here at 28.50, but we've got that naked VPOC at 27.50. What's the 2-day? The 2-day microcomposite. I'm going to use 24.50, and I don't usually use a area of price acceptance as a trade area, but that would be the first spot that I would be looking for some support. But if we fail, you can shoot for that 22.75. Okay, the daily ranges, using the high at 34. I'm going to get myself a new calculator. 34 minus the 18. So 16 is our daily downside ATR target. Boy, this area is getting really convoluted down here. So we have critical mass, monthly critical mass. We have our daily downside ATR target. We've got our month low, and then our key line in the sand. On the week, our week high is 49.25. Our weekly is running at 34.20. So our weekly ATR is down here as well at 15. This is becoming a very important area. All right, so this whole area between 16 and 1475 has got our monthly critical mass, our daily downside ATR target, our month low, our weekly ATR down target, and our key line in the sand. This is going to be a fun area. Okay, so those are the levels. The levels don't change above. You get key line in the sand. Above that, you're looking for a move into the 43.75. This is highly unlikely. It's only got, like I said, a what was the exact on it? 90%, 90.9% probability of filling that gap zone. And as we come down lower, it increases. So, what is my main hypothesis for today? My main hypothesis is going to be, a rotational day inside of this value area again with a downside bias. So we do have a large gap, so I'm looking at an open auction out of range, a push up into the 32 to 34, and then I'm looking for initiative sellers to step in and rotate us down into the 27.28 and push down into the 24, chop around here, and then push towards the overnight low. That is my hypo 1. Hypo 2 is a open test drive, failure to take out the overnight high, and then push immediately down into the 24 area, chop around in this area, and then push down and come down and test this 16 level down here and chop down here with maybe a late date probe down into the 11 or the 08 area. And then my hypo 3 is a open auction out of range, a push down into the 22 to 21, find responsive buyers, and then start working our way back up towards the half gap fill. And main target on hypo 3 will be up here at the 35.75. All of these hypos, okay, all are rotation, large rotations with sideways development inside of the microcomposite between 40 and 16 area. And I'm not expecting, a major move. My alternative, okay, is a major failure day and a move down, immediately sell off on the open, come down, chop around in the 22, push through down to the 15, and then fail miserably and come all the way down, okay, and test the 2400. That would be my alternative. I don't know if this news, how it's going to affect the RTH session, but we've made a big move down. We're likely to go sideways and get a rotational day as my main hypothesis. Gold. Okay, so gold finally made its move we were looking for. We're back inside of price discovery. We got as high as the overnight high that got up to 31.90. Our next target, which was the 13.30, has been taken out, and we're basically at an 11-month high right now with this move up. The next big target above is up here at the 13.48.80. But we've made a move. We're likely to fall off of this and come back and test the 26 level again, if not come back into the 22. Watch this level right here at the 24. If we break below 24, I'm looking for a move down into the 22s. We do have a bit of a gap here that will need to be taken out. We've got a naked close down here at the 15. We made a $45 move up. The average area I look for a counter rotation is between 38 and 42 in gold, and we made a 45 7. So likely get a $10 to $15 rotation at some point in time off of this level up here. Whether it happens today or tomorrow, I don't know. We could just get stuck going sideways around this 1330 area. But key level to watch is the 26 and the 24, and above anything above the 3740, I'd be shooting for the high of this day, which is right here, which is 34. So just keep an eye on what gold is doing. Pay attention to the rotations. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.